Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Tuesday, July 27th. Definitely feels like a Wednesday, and that's how these big earnings weeks go and big events weeks. We do have the Fed tomorrow, so So risk disclaimer in front of you. Everything that we're going through here is information purposes only, not giving out any advice or recommendations. This video is for education purposes only. If the screen is a little bit blurry, just give it a little bit more time for this video because YouTube does take a while to render the high definition video. So I would say a couple things for today. Some volatility that we got. You could see in terms of performance, the Qs were down 1.1% for the day. IWM was also down 1.1%. SPY was down less than that, and the diamonds, the Dow was almost flat to positive for the day. So most of the brunt of the activity or weakness was in those small caps once again, as well as in the Qs and in tech. So it's a couple things from this, right? Normally, I don't want to say normally, but when you see this type of volatility that's happening in China, China is a very big place, and it is actually been surprising that it hasn't really spilled over, to the U.S. market at all, or to any other markets too. But I mean, it is really weak, right? Look at the Chinese Internet ETF, which hit 104, is now down to 47. In the matter of where this thing was back in February. So there's some heavy volatility there. And, it's just kind of crazy when you think about how quickly things can happen like this. Now, of course, their market is very different than ours, and there's a very different political system in China. And this is a reminder, of course, when we talked about China quite a bit in yesterday's video. We also have been talking about it in the pre-market sessions. Notice another version point of control being taken out. If we want to look at we are down to the bottom of value now for the weekly chart. Remember, for the, I go over a little bit of how these value areas work in every one of these end of day videos. So again, volume at price, right? I'm on the weekly chart. So this value area is for the whole year, and it's derived from 2020 price action. Right, and by the way, look at the VPOC that was taken out on the lows last year in March. But this value area, and again, it's a testament to, once we break support, watch out. Get out of the way. Right, when you hear people, I talk about this quite a bit. But when you hear people on Twitter say, "Oh, it's cheap here. It's a great company," this can get out of hand much faster than you think it can in terms of downside price action, especially when, people are leaving. You have to remember too, some of the things that get tossed around on Twitter that are wrong, is sometimes that they're just talking about how well the company is doing. Well, this shouldn't be right because the company is doing this or this. Well, it doesn't really matter, right? It matters, supply and demand. It matters what funds, institutions, and even retail nowadays, if they're buying or selling. It doesn't matter how great the company is. If they're going to sell the stock, or if they're going to sell the ETF in this case, the stock's going to go down. Right, so it could have all the great things going on in a company, but if people are getting out much faster than normal, the stock's going to go down. Right, and that's the case. I've heard that about BABA a number of times. Like, back when BABA first had these issues with Ant Financial. Right, I heard this on Twitter all over the place. Oh, BABA's a fine company. It's it's cheap here. This is when BABA went down here, right? And went down in here. And I heard that all over Twitter, and like, these people are nuts on Twitter. They don't know. They know nothing. They just sound confident, right? It's kind of like the people on TV, right? The people in the financial media, right? I understand sometimes there's a draw, for younger investors or newer investors. When they see somebody on TV and they act confident, they're like, oh, they must know, right? Give me a prediction, right? But at the end of the day, no one really knows, right? No one knows, especially stuff that's going on in China. So you could say cheap all you want and about how great a company it is, but this has been in a. What I do know is that these names have been in a downtrend for a while, and they've not shown any reason technically to get involved. You could argue at this point that some of these things are due for a bounce. I could even argue that too, that some of these things are getting pretty washed out. But really, there's a difference between playing something for a bounce that's in a downtrend versus an investment. And a lot of the times that when things are in downtrends or when things are in uptrends too, they stay in those trends for longer than you think is going to happen. So anyway, that's my opinion on that. But yes, I think at this point, some of these things, I mean, look at this thing is down, like I said, 104 to 97. It's tempting, right, to say, hey, I want to buy the dip, and we do have some support, so you can trade off of this, right? There's nothing wrong with, as much as I follow trends and I try to avoid downtrends. I don't buy most of the time, other than for a bounce. I don't buy things that are in downtrends, and I stick with the trends. That has just really helped me over time. But if you want to trade this off of a 47 level, you could do that. Right, that is bottom of value for the Chinese internet ETF. There's also, you kind of have to watch out there. There's also that Virgin point of control, but right now this thing, and again, it's a weekly chart, so you don't know where this thing is going to hold up. But you can do that. You just have to think about where you're going to get out of it, because I find it very hard to believe, and that's another thing that people on Twitter fail to kind of illustrate is like, oh yeah, it's down a lot, I want to buy the dip. Okay, well, where are you going to sell it? Right? Is it $50? Is it 55? Right? What's your plan? Because it's not going to go right back up to 75, most likely. Right? It's not going to go back up to 61. Right? So you have to think about, okay, if you're going to buy the dip, where are you going to be selling this thing? Maybe 55, maybe 50, 55 if you buy at 47. Right? Because that's what people said down here too. Oh, I'm going to buy the dip. Right? Okay. We saw a whole bunch of call buying. Right, we've been seeing call buying, as well as ETF. There's been inflows in here. These were inflows. I've been putting those out on Twitter every once in a while too. When I see, there was inflows going into KWeb over the last 2 weeks. All right, but right, so there was calls going up here. So okay, if you bought this dip at 66, the most you got out of it or could have gotten out of it was 72. So again, the up $5, that's not bad if you caught the bottom perfectly. But again, that's what you have to think about. All right, but I would watch that 47 level for the. So there's something to kind of keep your eye on. All right, so that was one of the stories today, and as we started with yesterday's video with one of the stories, but I think at this point, the sentiment is pretty high in the Qs. Right, so this was a nice comeback from where we were this morning. The Qs were down 2%, and I do think anything would I'm surprised that the Qs have been this resilient at this point. So it's tough, right? We continue to see option activity in some things like a TDD. What else? MDB was another one that we saw some calls going up today. Bit of a cyber software name. But it's tough. I think really the adjustments that I talk about, position size, number of positions, and avoiding, option risk in here, and unless you're just playing something small, directionally. And that's the other thing that you could also think of in terms of the Chinese internet stuff, right? Sometimes I'm really negative about options. But what I talked about pre-market is that might be the best way to play the Chinese names, because you could only lose the premium, right? If you buy a call, let's say for $2 that expires in August or September, you can only lose that $2. You can't lose any more than that, right? And that's one of the things that's an advantage with options, is that you can take a shot on something, and that's the most that you're going to lose, rather than what we've seen happen in some of these China names if you own stock, right? If you own stock, you got really beaten up. Right? But if you own options, yeah, you take a little bit of a loss, but it's just the premium. All right, and if you go into it as you should with, in my opinion, with short-term options, that if you're trading options less than 60 days, you have to know that any premium that you put on could be, out the window very quickly when the direction doesn't go your way. Right? It's one of those things that, again, gets tossed around on Twitter that people don't realize. Anything less than 60 days, short-term options, very, very speculative. And in my opinion, you should be comfortable with 100% loss on anything that's that risky, that short-term nature under 60. That's the way I've learned to trade options over time, is to just realize that, you get some volatility not in your, the wrong way, that premium's gone. Right. So the best I could kind of manage that is to say only put in what you're willing to lose. Meaning, if you buy an option for $1, you might lose $1, right? Instead of stopping yourself out on an option trade, which I think is kind of ridiculous to do unless it's only down, unless you change your mind in the middle of a trade and maybe it's only down to the option's still trading at 90 cents or 80 cents. But yeah. So anyway, I'll move on from that. What else? A couple other things to note too. If you follow like RSI divergences, in addition to the market breadth divergence that we've been seeing, right? We have not seen, everybody's been all over this. This has been going on now for about a month, where we've seen the advanced decline line not confirm what's going on in the price action, right? Now again, when we look at the NYSE, it includes more than the S&P, right? And it does include ADRs and things like that. So you can kind of rationalize some of the weakness, but we know that we've had some issues, right? This is what's known as a divergence, right? And you kind of have to be careful of divergences. So that's the story for a month. So at this point, right, you've got things like the breadth divergence. Right. You also have now an RSI divergence. Right. When this made a new high, right, it made a lower high in the RSI. Now that can be worked off. It doesn't mean that the market's going to sell off right away, but you could see the same thing with the S&P here too. Right. You could see that here was the RSI getting up to about 69.70, and the last peak, it actually made a lower high, which is 63. So you have several divergences going on in this market. So, what I would say about that is when you have some warning signals, right, take some action so that you're not surprised when you get volatility. Okay, and make those adjustments that we talk about in our weekend videos. Right, those adjustments that are important. Okay, and then other than that, besides the technical divergences, right? Do I sound too negative today? Probably. I've been sounding probably too negative for a little while, but we have a Fed meeting tomorrow, right? And we get more earnings. We get Facebook tomorrow, with a bunch of other earnings reports. Amazon later in the week on Thursday. But, it's a lot of information. And one of the things I read somewhere, speaking of how I badmouth Twitter, but there's some good things on there too. I don't have the exact stats, so I'm going to butcher these. But when this many companies report, when this percentage of the S&P reports in 1 week, it has not been a great thing for the overall index. I think the S&P is usually down like 4 out of those 5 weeks. Where you have this many companies in the S&P reporting. So that's also another reason to be a little bit more conservative, and that's not even including, I don't even know what it means when there's a Fed meeting with all that going on too. So if that doesn't tell you, like, if all these things that I tell you aren't adding up to be a little bit more conservative, then I wish you good luck. Because it's a lot. We're also, we're at the highs. It's the summertime. So, I tell myself these things too, and it's tough to follow. I had some trades today that didn't work. I was looking to buy the dip, and I bought the dip a little bit too early in some, I tried to buy SE too early, and it got sold off, and I ended up getting out of it. That's usually what happens to me. I also got rid of my Melly today. Where did that finish for the day? Because I just didn't want to be in anything emerging markets. It looked like they were just taking stuff out to the woodshed today. Melly actually held up quite well So I perhaps didn't need to get out of it. Anything I get out of, I could always get right back into. I did this with HZNP today too. Again, I was just worried that we were seeing a little bit too much volatility, and I put this back at the end of the day. So I lost $1 or two by doing that, but I would rather be much more conservative with this market. TTD was another name that I wanted to be long, going into, the earnings. But, in my opinion, this TDD doesn't have a lot to run. There's a virgin point of control right up here at 85.62. There's also one at right around 86. So my guess is that maybe all that this thing has in it for now, and then we'll just have to see how it handles those two virgin point of control takeouts, right? Because again, there's a lot of volume up there, right? We talked about that in yesterday's video. So that's it today, guys. The only earnings trade, I think that these, as I've kind of talked about before, with the earnings season, I think a lot of the trade is the buy into the earnings report, right? And you sell the news, right? So the one trade that I did was I sold the put spread. So this should work. I think Google came in a little bit from the highs. It hit 27.75. It's up to 27.19. So as long as it stays, as long as it's green, and I even have some bumper room into that, I sold the 25.80. 25.70. So here's my my level that it needs to stay above, and I like selling premium, right? Tesla was a great example of that too, right? Selling premium. All right, and then the other names that reported, look at Apple's even down. So you might ask yourself, and we've been going over this for the last couple weeks. Apple had great numbers. Why is the stock down? Well, because look at the path of what it did. It's not exactly cheap anymore. Right, this thing has made a run from 130 up to 150, and again, it's in trading, it's buy the rumor, sell the news over and over. Microsoft too, right? No reason to go long this name on earnings, in my opinion. It's already made the move, 250 to 286, right? So a positive earnings report is built into the stock. Right, so it's very difficult for these names, and when we get to Amazon later in the week. I'll give you the two. You have to remember if people are not expecting a good earnings report and they do hit, then you could have a reaction like this, because I don't think people were expecting that much from Facebook last time around. Amazon, the expectations are always high, right? So you could see the last 4 quarters. The stock hasn't gone up over 6%, and it's been down 3 of the last 4 quarters. It's actually, so if you're looking for like a whopper out of Amazon, just keep in mind what it normally does. Right? Out of the last 10 earnings, again, this is the most important thing if you're a trader, not what their numbers are. Right? Some of these people, again, I'm really giving Twitter a bad name, but some of these folks on Twitter get so hopped up when look at how much the company reported. It's such a great company. Well, if you're a trader, all that matters is this: what the price reaction is, right? That's what concerns me. Now, look at the numbers. So, out of the last 10 quarters, the reaction has been 7 times Amazon has gone down on earnings, and 3 times it goes up. Do you like that? Do you like those odds? Those are not good. I like to stick to the ones that are positive, and that's why I did that Google trade, because Google has better earnings history. Last 5 earnings quarters, it's gone up 4 out of the last 5 times, and I do tend to weight some of the near reports, weight them higher than the older ones. This went up 5 out of the last 5 times, but like I said, 4 out of the last 5. All right, guys, that's it for the day. So yeah, that's kind of what I go over in the pre-market session. If you're not a member, we go over a few setups, but it's really being a risk manager is important right now with all these things going on, and it's walking a fine line right now with having some exposure in the market for things that are doing well, versus just kind of staying out of this market right now because of these divergences that we're seeing both in breadth as well as RSI divergences, as well as a whole bunch of other events going on this week. All right, so we'll see how it shakes out, and continue to kind of tread carefully at least this week. All right, guys, thanks for watching. Have a great night. See you tomorrow.